The market is 11:26. Well, into the morning, and I'm looking at the VIX. As definitely volatility is coming back. The market has been up and down, and mostly down. So volatility definitely comes up. Well, it might even bounced off the 200-day moving average on volatility. There is a tradable instrument on volatility, but it's actually a long-term downtrend, so you don't want to buy the instrument in actuality unless you use it as a hedge. It's a great hedge against a long-term bull portfolio. In that sense, that volatility, when market goes down, volatility spikes up, so you can either buy a short instrument, an inverse instrument, or also you can bet on volatility in that sense. But you have to be pretty accurate on trading the VXX, which is the actual tradable instrument of volatility. But you take a look on a longer time frame, it's always on a downtrend. It's always on a downtrend, and this is not a shortable instrument in actuality. But so you see, there's a little spike, but it's far away from 200 moving days average. Matter of fact, if I switch to a monthly bar, you see every month is actually going down. Unless this is the pandemic. This is the pandemic, then spike for a few months, and then eventually collapse again and come back volatility. It's always been the case. And look at this. It's a very steep drop too. So unless you're in one of these end of the world, end of the market situations, it's very hard to make money off it. It's a hedge. Use it as a hedge against your portfolio. If you construct a very low volatility portfolio and you have a very high beta to the market, then excuse me, then you might want to do this when you have confirmation of an incident like that, a worldwide incident, the pandemic. Otherwise, or kind of like the market meltdowns on 2008, the internet bubble, the subprime, all that. Other than those, right, this is 2019 or so, it volatility spike, and then eventually, guess what? It comes back down. So yes, there's a long-term downtrend on the volatility. Just knowing that, if you trade it, so on the VIX it's different. It's just the way they calculate and back into it. On the VIX is you have a more flat across the board, right? Then funds value, you have a spike. So you would say, back in the day, I say, oh, this is great. I just hold long term, right? Buy it, and then when it spikes, I make money. But in actuality, the tradable instrument does not allow you to do that. Yeah. So, yeah, you're better off using what do we call delta neutral trade for option trader to trade volatility in that sense. Much better control of the trade in that sense of how you adjust and how you position yourself versus using the VXX. Okay, let's look at the broader market. It's Monday, right? The broader market is coming off a little. The DJI is coming off a little, while the spider, same thing. Nice. And the QQQs, yeah, they all move in unison. Let's put this. As I compressed it before, so somewhere. Let's move this. I don't really see any long short pay at this point. This guy. It's like it's really okay. There we go. Better. Let me see. This is the breakout level. So it's in between these levels now. This is in a trend here. This is a trend here. This is the bottom of that trend. This is the top of the trend, and to the inside this area. Great for swing trading. Great for swing trading. We make new high. If we make this market make new high and the MACD doesn't, those are great for swing trading. Looking for reversals again. Right now, yeah, could be that. Want to see if it tests this level. What is the market going to do when it tests this level? This is the peak, the previous peak after a very long run since the beginning of the year. I'm on monthly, that's why. There we go. Yeah, monthly is very clean, as you can see. That was very clean. The longer your time frame, the cleaner your chart is. Very apparent. A long turn up, and then for the year 2021, 2022 to 2023, I see it was a down year. This year was up year, trying to recover that. Very clean. I was like, wow, yeah, that must be monthly. Now let's go back to the daily. The daily. Let's get that out now. Now we can see where things are again. Okay. So it bounced off this level basically. We've done that. That was a breakout from here from trend. And then that came off. Look at this. This is pretty obvious, kind of like a hammer. This is a hammer. And indicating the sellers are in charge because the tail of the hammer is on top. When the tail of a hammer is on bottom, see if I find something like that. On the bottom, then the buyers are more in charge. Okay, this is a hammer that the tail's on top, so the seller's in charge and they're pushing it back down at some point. So the market is still in a bearish mode in that sense. Russell 2000, small cap, and that is all the way back to the red line, 200 days moving average. So the polar market indexes have been coming off, and there's no reason to go long on these guys now. Unless I see confirmations of buyers coming back in. Be patient, have to be very patient when you trade. Look for a good setup. Yeah. Regional banks. Yeah. Interesting. Look, right away I see this is sellers coming back, or I'm sorry, this is buyers, right? You got long tail on the downside, so they sold it off and then the buyers come in and push it back up. I want to draw a line on this guy. I want to draw kind of like this, touching these two areas. Kind of like potential support line. 1, 2, 3, maybe a fourth time, right? 3 times the charm, and maybe a fourth time where it might bounce off. So could look for a swing trade, but in a sense, yes, this higher low on the MACD, so coincident indicator, coincide with this timeline, this support line. If it turns here, would be nice if it's more slanted. Of course, to make it well standard, very clear. Potentially, is it going to bounce off this? Who knows, right? But that was the nice. If it bounces off this, like at this level, that would be better. And clear, you see where this is, and this level, this level, this level, this level. This should be here, but it doesn't. So it's a weak bounce, if anything. That's what it's telling me when I connect and look at the overlay different indicators that give me a relative strength. This stay on top of this support line. The bounces came off, bounce, came off, bounce, came off, bounce, and came off and bounce again. But over here it tells me the momentum right here on the last bounce on this area right now is much weaker relatively to previous bounces on the MACD line. So yeah, this is how I read it. And okay, Yeah, things are just coming off in general. Um, uh, Last 2 weeks of summer, so not much really going on in that sense. Bitcoin I read about Friday came off. Wow, came off below 200 moving average, penetrate right through. So be careful if you have these Bitcoin trades on. I don't trade Bitcoin. I don't trade crypto. I just failed to see what. I mean, I failed to see a good trade. So for the past few years, I don't really follow Bitcoin. So yeah, it's kind of like the tulip trade back in centuries ago for Dutch tulips, where they run it up and then eventually the whole thing collapse. Yeah, so but that's not my area of specialties, so I don't know much about that. But I don't really trade those cryptos. Uh yeah, gas, natural gas depressed. 20 years, interest rate goes up and it comes down in that sense. Just I don't know. I mean, when this broke, could have looked for continuation of downtrend, but barely give me a nice false segment. Just a little doji start here. That's about it. So, gold, coming back below 200 days moving average. Silver below 200 moving days. China large cap. Yeah, China have bad news. They did a the central bank, China central bank did an interest rate adjustment, but I leave the long term. They only raised the short term, if I recall correctly. So that was kind of disappointing. What the heck are they doing? Basically, people are saying. So it continued to be weak. That their economic recovery is not robust post-pandemic at all. So it's really coming off, and that is that these because of that, it's hurting my neo tray. Yeah. So it's fighting at a level where I'm gonna break even on this one, and on that one look much better because it's a much stronger stock. Alright, so the stuff always a 50-day moving average. This I can hope. This one I might end up owning the stock, converting, take some losses. So we'll see how it pans out. It's right at my level, right at that level, and that's one of the possible scenario of the six scenario we could do. Yeah, this is six on the sixth scenario where I go right down, go right through. That's where I end up owning the stock or taking a loss. Right. Other than that, on our 4, 5 out of the six scenario, I can make a little money. I just need a little up move, or I make the whole thing. So yeah, this is a 80% that will end up making money from the beginning of the trade, but it did all this, look this, it did all that. This is what the bond worry about. When they give me a long tail, it's sold off and a gap down. So this is a drag from the underlying Chinese market. I mean, this was the break area. Now it's right below the break area. Normally, this trade is actually, if you trade it, just an instrument. This trade should have been right when you break below this. This is where you really have to take the loss. It's a big loss to a normal trade, but because I choose option, that put me in a much more advantageous positions that I can stomach all this, and I can still come out. If it just stay in this area, I'll come out still making a profit. Yeah. So yeah, it is what it is. You win some, lose some. Only time is it close at the end of the option, which I still have all this time left to go for it to move up for me, and I need to move up somewhere. I can even take profit or just neutralize trade or a small loss. I just need to move, and I can't just neutralize the trade and go flat on it, and it won't hurt me much because I pocket all these premium all these time too. So let's see what happens. I still have a lot of time on my side on this guy. Even if it come through, I still have time that it just need to make a move. It closed above this, which is 1070. But now it's fighting at my level, so yeah, it's the nature of trading that inevitably you might have to take some loss. But on this guy, actually I want to own. So when it goes back to $10 or so, hey, yeah. Now the question is, the real question on this trade is, since I'm not going to adjust this trade, first question is, do I want to adjust this trade? I mean, I close it out and open a new lower one. Takes this small losses. Right now it's small losses and then open a new one. The second is, do I open a new one? First, do I close? No. Do I adjust? No. Second is, do I adjust? Third, do I open a new one? No reason to. I don't see buyer coming back in. I don't see the broader Chinese market giving good fundamental news. So there's no reason to add the second leg. And right now, let me just leave this guy. Yeah. Meanwhile, Lee is holding up well. Far away from where my loss area is. And the next level is right here where the breakout level is, so that's fine. This is good. This is promising. This is promising, so speaking. It looks like there's support here, so leave this guy alone. Nothing to do. Let time do its thing. This guy, let's see if I have time on my side. There's no reason to close out the position. There's no reason to make adjustment. There's no reason to add. So leave it at this. See if it do an up move or down move or sideways. Right. But had I just bought the stock, then wow, that's a pretty substantial losses. Right? Yeah. So yes, it's a very different play that using options, I put a lot of odds on my side. Of course, if I end up losing the trade, I will have to pay more. I will lose more, as much as like 4 times more on using options. That is downside. There's no free lunch. But, however, I want to own this guy from the beginning of this trade. So either way, to me, this is kind of like win-win because I'm long-term bullish on the China EV stocks in that sense. So that is fine with me. And this is kind of like open the trade. I'm just going to walk away and let it do its thing. And then owning the stock, that's fine. I end up not having more of the stock, and I take whatever I have, and I wait for the next trade, and I'm going to do this to repeat the same thing again. So it's a win-win for me because I have a long-term goal. So I'm using option to buy stock in a sense. I'm trading around it. I'm also using options to buy stock, and that's how you should buy stock too, using options when it comes off. That's how Warren Buffett do that. That's how hedge funds do them. We use options to buy stocks. We use options to sell stock. That give me a lot more positioning, how I want to position it, where I want to buy it. You cannot time it. It's very hard to time. But you can pick exactly the point where you want to buy and sell. You decide, all right, this is the price it's trading at, either buy it or sell it. So that, I say, hey, it's running up. I don't mind buying it when it comes back down because I have this long-term uptrend on it. I have a big below, I want to buy it. If it's around there, I want to buy it. Yeah. So, to me, this trade, either way, it's kind of like win-win. The only way I will lose is the fundamental change. Then, on that, I will have to wrap my option trades around and minimize my losses. And I use options to do that. There's a lot of things I can do with option. Right now, I'm just using a very simple case secure puts on the selling puts. Sometimes I actually like to use Broken Wing Butterfly, BWB, which is 4 legs of option trades combined together. And, sometimes I do condors. Sometimes I do J-Lizard. There's all these different type of strategy that you combine multiple option legs to become very different, where you control where your losses are, where your wins are, how much you want to win on those areas, and how much you want to lose on certain areas. You can adjust a lot of things using options, and it opens a whole new dimensions for you. It's like if you just trade stock, buy and sell stock, you're playing in a 2D market where there's only up or down and sideways, which gives you what? Well, the market go up or the market go down or the market sideways. The only way you make money on a directional trade is going the direction. In that sense, 1 out of 3, you only have a 33% chance of winning in that sense, right? Now that's difficult. That's difficult. When I use options, that's whole different. I'm become 3D. I have 3 dimensions. I have volatility. I have underlying pricing. I have time premium. I have all these other things that combine to it. Yes, it's much more complicated. But once you start learning and get the hang of it, everything just makes sense. And then you can construct this trade, and you can play very differently. Now, like right now, look, the market, the stock came off so much. I can still make money. Tell me you can do that if you just outright directional trade on the underlying, on the stock itself, on the ETF itself, on the index itself. You cannot do that without using options. You cannot skew the probability to your side without understanding utilizing options. Well, people are scared of the unknown. Then go learn it. Discover it. That's what the human race is about, right? It's how we move forward. And these things are not even new. They've been around. They've been around for centuries, actually, options. Yeah. But the modern financial system allow us, the retail guys, little guys like us, to start utilizing this very powerful instrument. So I don't see any other way. I don't see any other way that I could really skew the probability on my side without utilizing options. Just using stock is just, wow, why are you playing in a 2D market when we're in a 3D world? Why limit yourself? Why tie your hands and legs? We can do so much more. Just learn this stuff. It's great. It's powerful. It's great. And relatively, once you learn this stuff, you'll be asking yourself, why were you just trading stock directionally or however you were just using stock without using options? Yeah. And often give you so much level. A very inexpensive level you will think about. Each option contract is 100 stock, 100 underlying stock. You control 100 stock with just one contract because you just bought the right or sold the right. I rarely buy options, but when I buy them, I'm pretty sure about my trade. I'm willing to go 1 to 100 levered. I'm looking for that explosive return. And it's phenomenal. This, right now, what I'm doing, is just to learn to keep myself ahead and keep my mind working. What I'm really looking for is that big trade. Is that big trade where everything lines up, say, oh, I'm going to buy as many as I can of that stock using options because I want to buy 100 clip at a time. And I don't need to fund out the money. Hey, you buy 100 share of stock, even you have a margin account, 50% margin account, you got to pull out half the money. Options, you put up a fraction of that, to own 100 shares of that stock, for the right to own it. And you have these trades that use very extremely probable buy the options and own thousands and thousands and tens of thousands of that stock. This is how you're going to make it. Right? In the meantime, we do these trades and we continue to analyze and process information that affect the market, affect the underlying. Until I see one of these, right, the next false hammer, if everything's lined up, the broader market line up, US is happy, Chinese economy is happy, and it give me a false hammer, instead of selling this, instead of doing cash secure put, just that, I will also buy these options and look for the momentum up and to bank it in. But we're just starting at a point where this is just the beginning stuff. This is where you learn to analyze the market, learn to keep your mind attached, learn how to process information so you can see the big trades down the line. So I can see the big trades down the line when it happens. You need to be there. You need to be there to play it, right? And you want to be there when you see those. But how you can train yourself? You're gonna do this, and it doesn't take long. This end of market bar, daily bar. Spend your 10-15 minutes, half an hour. Once you learn this stuff, it doesn't take much time on the daily to overlook the market. Look, just my list. If I want to expand my list, I just go look for sector that's hot and I play those, right? And this year's is all about SAMMYs, all about AI, artificial intelligence. So I have a long list of those guys. Right? Next year, who knows? Next season, whatever's hot, whatever's moving, I will put them in my watch list and they'll be on top of my watch list and look for trade. I'm looking for the big trade. The big trade of my life. Yeah. And that's how you bank it in. But in the meantime, make these small little one. Make some small profit. Make some pocket money. Make some extra cash until the big one come. And then when the big one come, you go on it. In the sense that whatever your risk capital is, well, there will be times in your life that you say, I should have, I would have. And then the rest is about whether it's going to go your way or you get wiped, right? But at least you did it. And then you make a comeback. If you didn't make it this time, then slowly you lick your wound, slowly recover, do your nest again, and try again. Until that one time, you make your buckets of gold, and then you scale back. And you put those in the safest instrument in the world and don't touch it. Put it in a gold bond, in US government bond, and leave those for your kids or donate it to a worthy charity cause, whatever you want to do. But learn this stuff. Yeah. I'm enjoying this. I'm waiting for the super big trade, but when it happens, it happens. It doesn't. Now, how often those super trade come? The really good one is once in a decade, I would tell you. Collapse of the market. When the market is down 40%, 50%. When Citibank was $1 during subprime blow up. I'd buy Citibank at $1. Yeah. I'm selling a bunch of cash secure puts. I'll buy Citibank $1. But the last bank blow up, the recent one, Silicon Valley Regional Bank, no, they're not getting any bailout or anything. Not like Citibank. Citibank's too big to be broken. Even the subprime blow up. Yeah, Lehman Brothers blow up, but it was some bank. The Citibank is different. You cannot let it blow up. So the government came in but it dropped to $1 at one point. Those were the trade of your lifetime. Yeah. Or the internet blow up, and it like everything just collapsing. You sell the crap out of it on a momentum trade. So there are these trade that is once in a decade. And typically in your lifetime, hey, at least you should catch 2-3 of those. Yeah. I always say everybody in your life, during your life, has a couple buckets of gold. If you know, you prepare, not just know, but you prepare yourself ahead. And then when time comes, it's very likely it could be yours. But most people miss it by. Most people just let it went by without knowing how to capture it. So yeah, this is why I'm so insistent in doing this. I write books. These are stuff that I need to teach and pass on to the next generation, to my kids, to my relatives, to my friends' kids, the next generation. So when the time comes, they can be financially independent and pursue what's meaningful in life. Make the world a better place, make their life better, make everybody a better place, make everybody happy. Then the world will be at peace. Then we don't have war, we don't have all this crap, because most people are just struggling. And so much more we can do. So much more. And well, anyway, I'm getting off topics. Anyhow, so yeah, so that Neo trade is where it is. Is where it is, and we'll see. Well, this is the volatile. Well, look at the market, big down bar now. Yeah, but Neo and those guys are green, so I guess they sold off enough. That's why they're not really pushing it down further. I guess maybe. Yeah, who knows, right? Yeah, but yeah, the DJIA broke through the 50 days and is down here. It's what it is. Okay, so it's Monday. 2 weeks till Labor Day weekend, and these 2 weeks I don't plan to put on any trade. The market, everybody's really away on vacation right now in actuality. Even if you're not like in vacation, your mindset is just not here. My mindset is not really thinking about where should I trade, all this stuff now. Right now it's just let's take a look, take a peek, and then let the market do its thing. And then comes the next quarter, let's ramp it up again. Right now, unless there is extraordinary news, situations arises that really move the market, that give me a really good trade right now, I would say the market is much more thinny trade, and it's very not a good place, and to be, because volatility gets spike, and then you can do reversals, and it could be all over the place. I expect these 2 weeks the market to be all over the place, nothing much meaningful. Even you try to make a major move, and the next day it's going to neutralize it, and make another major move, and then it get neutralized, and it's meaningless in that sense. Unless there's real big fundamental news came out, or comes out, that really moved the market. Okay, well, that's it for today. Thanks for watching, and I see everybody next time.